Hello, everyone. Thank you for joining us today for our weekly webinar series. My name is Lisa Doe, and I'm a family law attorney here at Beresford booth. I'm so excited to welcome a special guest today, Victor Lopez of Moto Mortgage. His office is right here in downtown Edmonds, a few blocks from our offices. And we will be discussing refinancing in the context of a divorce and common questions we both have heard from our clients. Victor, thanks for taking the time to join me today. Can you tell us a little bit about yourself and your company?
Absolutely. And hello, everyone, and thank you for having me, Lisa. It's a pleasure to be here. Our company is located here in downtown Edmonds. We've been here for a little bit over 3 years now. We're a mortgage brokerage, a model mortgage group. It's the name of our company. And we've been helping families for the last 3 years in this location.
And do you have any special services or products that your office specifically provides?
Absolutely. We do anything related to mortgages. We do refinances, cash out refinances, purchases, reverse mortgages for those that are looking to get a reverse mortgage, especially in this area. And also we work with DACA recipients. Those are the early childhood arrivals here. And we do all the products out there that all the conventional stuff that's out there. So we do it all. We're a one-stop shop here. And also my longtime partner, he's a certified appraiser. And our manager here, he has been in the industry for over 30 years now. So, and myself, I've been in the industry for a little bit over 15 years. So between all of us and the team behind us, we are a one-stop shop, and we have a big team behind us.
So I know that many of my clients that are contemplating or going through a divorce have many questions related to what happens to a mortgage on the family home that is in joint names post-separation and post-divorce. And I know, Victor, you're a wealth of knowledge in this area, so I'm so happy you're willing to share this information with all of us. What has been your specific experience and involvement in divorce cases?
Typically in divorce cases, most of the time somebody is looking to get paid. The first thing that happens is that we need to figure out how to separate that commitment from that loan and divorce cases, right? So there are two ways we can do that. We can do a refinance, or the other party could get paid out from that property, and they can do a quit claim deed essentially.
So you definitely have experience working with clients that are going through a divorce or just recently divorced or looking into getting a divorce.
Absolutely. That's part of what we do. So we're here to help, and we have several options to do that.
Okay. And I think you told me you have at least you deal with parties going through a divorce, post-divorce at least several times a year. Is that right?
Yes. Yeah. It's not uncommon to run into those scenarios for us. So
right.
We're ready to tackle those as they come.
So I thought we could have our discussion in kind of a Q&A format using a common scenario and going through common questions I have heard, and I'm sure you have heard as well. So a common scenario I see in my divorce cases are, so the spouses are divorcing, there's a family home and a mortgage, both are in the names of both spouses, so that's the deed for the home and then the mortgage loan. And then one spouse, let's call them spouse A, wants to keep the family home post-divorce and needs to pay the other spouse, let's call them spouse B, for spouse B's interest and to also remove spouse B's name from the mortgage. So, and that's a common scenario you see, I believe, right? Okay.
Sure,
so
yes.
How can spouse A remove spouse B's name from the mortgage?
So there are several options. The easiest and the most common one is to refinance that mortgage, right? So during the refinancing, everything starts over fresh. So there's only certain requirements to be able to do that, to refinance the property and removing that other person, um, that person's name. In this case, it would be person B. Um, they can refinance the property. Person B can do a quitclaim deed for the property, and essentially um, release all interest in the property. Now, if there's going to be a payout um, during that transaction, if person B is willing, it, I'm sorry, I shouldn't say willing, but it's expecting to get paid out. There's a way to do it once the divorce is finalized, and we have that final document from the court saying that it's finalized. We can then go ahead and ask the lender who we are refinancing with and say, hey, look, the divorce is finalized. We can now refinance the property, get some cash out, and pay that other party out.
Okay.
Now, in order to do that refinance, the party A has to qualify for the mortgage.
So Victor, we'll definitely get to there, right? I just want to interject and go back in terms of why are we doing this? Why is spouse A removing spouse B's name from the mortgage? And I can tell you, it's pretty common that the court or the parties will agree that spouse A, to keep the family home, must remove spouse B's name from the mortgage. The reason being, if they do not do so, this mortgage loan will show up in both parties' credit report, which affects spouse B's ability to obtain loans going forward, specifically to obtain a mortgage loan to purchase their own home if they should choose to do so after the divorce. And it's not an absolute. Sometimes there's time given to be able to do that. But in general, most spouses, after they divorce, they want to move forward, everything separated, assets and debts, and they don't want to be committed in any way. Further, so when parties are divorced, right, in the divorce order, usually you are responsible for the debts you are assigned, right, whether that be court ordered or agreed between the parties. Now, this is not binding. This divorce order and the terms of the divorce are not binding on the lender, right? So, for example, spouse A defaults on the mortgage loan. This will affect spouse B, right? So,
correct.
The lender closes on the mortgage loan and there's been a default, right? And that's going to affect both parties' credit. And spouse B clearly does not want to have that hanging over their head or having the risk of that. And the lender could go over after spouse B as well, as spouse A is not making the monthly mortgage payments, and right. And then spouse B's recourse would be to have to go after spouse A, which is more litigation, and no one wants that. So, and so let's talk about timing a little bit, right? So let's go back to that first question. Is there any other option for spouse A to remove spouse B's name from the mortgage other than a refinance? I don't believe there is there?
There is, and it depends if spouse A qualifies on their own for that mortgage, they can certainly do a refinance, whether they want to do a refinance, just a regular rate and term, which means no money, nothing, they just refinance the total that's owed on the first mortgage. Once they do that, then spouse B can sign they can sign a quitclaim deed. They don't want anything to do with the property, and then we're good, because now they're not going to be on the other loan, on the new loan that's coming in. That's one way to do it. The other way to do it is to do a cash out refinance before before everything, the whole divorce is finalized, right? So if they qualify for a cash out, spouse A qualifies for a cash out refinance, then they can just pay out of that cash out and pay the other spouse, and then they can do a quitclaim deed and go from there.
But essentially, those are just two types of ways to refinance.
Correct. Yes.
Yep. Okay, so let's move on a little bit to timing. So when can this happen? And you kind of alluded to it, right? When can spouse A remove spouse B's name from the mortgage?
Once it's refinanced. Obviously, they have to refinance in order that loan has to be paid out. They have to pay
Like,
that
can
specific
they start,
mortgage.
can they apply to refinance prior to filing for divorce, pending a divorce case, or after a divorce case is
Absolutely.
finalized?
It's just a matter of choice by both parties. If it's an amicable situation, they can do the first two options and they can take care of it. They can do a quick claim deed. Or if it's not something that they could do right there and then and they want to wait, we can, we can definitely wait and have them do it after the divorce is finalized. It's just a matter of them deciding when they want to do it.
Okay.
But
And I
essentially, it can be done both ways.
And I can say from my end, from the legal aspect, right? There are many concerns about the timing of when this occurs.
Right.
So if you're in this situation, I highly advise you to consult with a family law attorney, right? To make sure you're applying, right? And that the refinance goes through at the appropriate time. So I've dealt with many lenders, right, having to deal with this issue for my clients in their divorce cases. And I find that many lenders want an actual divorce order, like the parties
Mhm.
are legally divorced. These are the terms of property division, who is responsible for the mortgage, who will keep the family home. But they require that divorce order prior to the refinance. Do you know, is that true?
In the state of Washington, as you may know, it's a state that no matter if you're married and there's no legal document, you're still together in that property, right? I'm assuming. So until you have that divorce, you're technically still attached to that property. But in the case that they want to start the process early, we can go ahead and start it. And then once the divorce is finalized, then it's finalized as far as the loan goes.
What about a property settlement agreement? So a property settlement agreement is a contract between the spouses, right? That addresses division of property, who keeps the family home, who's responsible for the mortgage. Is that sufficient to move forward with or to complete a refinance, or does the lender actually need the divorce order?
Based on the Fannie Mae Freddie Mac guidelines, they do require the divorce to be finalized by the court. That's per guidelines from them. Now, it could depend also on the lender as well, because different lenders have different guidelines. But I can tell you that the standard answer is going to be that they need to have the divorce finalized as per the guidelines for Fannie Mae and Freddie Mac.
Right. So generally, lenders are going to need that divorce order. There may be some that are an exception, that a property settlement agreement
Mhm.
or some type of contract signed may be sufficient. So,
That's correct, and that could change with private investors. If the lender it's a private investor that doesn't sell to Fannie or Freddie Mac, they might be able to do something with that. But most lenders are going to ask for that to be finalized. Correct.
so in terms of payout, so how can spouse A obtain cash to pay spouse B for their interest in the family home? So many times, right, if spouse A is keeping the family home, they have to buy out or pay spouse B their interest in the family home, whatever that may be. And that's a legal issue as well in terms of determining what that amount is. But how can spouse A do that?
Uh, like I said, they can do a cash out and pay them out, or once they refinance, they can do a cash out. Um, they can do a cash out. However, their interest rate is going to be considered as a rate in term, right? Because sometimes when you do a cash out refinance, it's a little bit more expensive, so your rate's going to be higher. Since this is a court order or a finalized divorce, um, the bank will consider it as a rate in term, meaning it's going to consider as if it was as if they were only refinancing the balance, right? So it allows them to get some cash out and paying out the spouse B in this case, and also having the benefit of the lower interest rate as a rate in term.
And so when we say
That's going to
cash
help out.
out, we're saying taking cash out from the equity in the home. Is that?
That is correct. Yes. Yep. Taken out from the equity of the home that's left after the principal balance.
And so can you, because I know this is something new for me, can you kind of describe the differences or what rate in term is and what cash out is? From my understanding, these are two types of ways you can refinance, but can you kind of give a little summary in terms of what each are
Sure.
exactly?
Absolutely. So a rate in term just means that we're just refinancing whatever the balance is, and it's going to be a specific term, right? And in many cases, it's usually a 15-year fixed or a 30-year fixed. So if we just refinance with a fixed rate and a fixed term, that's a rate and term loan.
And you can
If we
still get cash out in a rate in term, is that right?
correct, if we have a finalized divorce by the court, because the bank sees it as, okay, we got to pay them out and you're still going to owe this, but we're not going to penalize you for taking that cash out from the equity. Now, if we do a straight cash out, meaning taking money out from the equity and the divorce is not finalized, or you just want to get some cash out for, let's say, for remodeling or something like that, and you take cash out from the equity, then your interest rates are going to be a little bit higher because the banks see them as, we're giving you more cash, so we want to make more money on that cash that you take out. That's the difference between the rate and term and the cash out option.
And then, so if you refinance, what will the effect be on the monthly mortgage payment for spouse A going forward?
It depends. It depends based on the rates that are actually going on at the time of the refinance. In this case, it would probably be beneficial depending on how long they've had their current mortgage, because we have historically low interest rates right now. And they're keeping steady. They're going up a little bit, but not too much, luckily. So I say anybody that refinances now and that is possibly in the loan for more than 2 years, they would definitely they'd be in for a good, pleasant surprise that their payment will go down, unless obviously they do a cash out or they want to pay their spouse out. It's going to be a little bit more because their total principal balance is going to increase.
And I'm assuming they need to think about the principal balance and the length of the loan being affected as well when they refinance.
That's correct. Yeah. And in some cases, your payment would remain the same because even though your principal is going to increase, your interest rate is going to decrease. So it's going to make up a difference. It's going to sort of balance out itself, luckily. And I've seen it happen so many times when people do a cash out refinance when their payment remains the same because their interest rate drops dramatically. We're talking maybe 3/4 of a point, even one whole percentage point makes a huge difference. So even though your balance is increasing, your rate decreases, so it balances out and it keeps your same payment with taking some cash out.
So what information or documents do you need from either spouse to refinance?
To refinance, we're going to have all the basic financial information. We're going to need your last 2 years W-2s, your 30-day pay stubs. We're going to need last 2 bank statements. And we're also going to need to have a full application. It's a 1003 application. We can fill that out for them, or they can fill it out electronically in our website. It's a secure website that we have. They can fill it out. And those documents can be scanned into that system, and it's going to be all secured, or they can drop them off here at the office. So we can start the processing.
This is specifically financial documents for spouse A, since they're the one that will be refinancing, correct?
That's correct. Correct. Yeah. For in this scenario, spouse A would be the one that's needing to supply all that because they're the ones that are going to be being able to qualify. So.
What criteria are lenders looking at when determining whether spouse A qualifies to refinance?
So there's always four things that a lender is going to look for, right? They're going to look for their credit, obviously, and to make sure that they pay on time. They look for assets, and they look for collateral, meaning the house in this case, and they're going to look for income. So those are the four things that they're looking at to qualify somebody. So when people first come to me, that's what I do. Um, you don't necessarily need all four to be perfect, but there's always a way to create the whole package, the whole application, where if we're missing one of those things, it still can be done. Being a broker shop, we have that flexibility to be able to make things work.
And then spouse A must have sufficient income to qualify on their own without the income of spouse B. Is that right? Okay.
That is correct. Yeah. So just if we can take a look at it and see it as a, hey, we're starting a brand new loan. In this case, we're just not going to have the income from spouse B. So they would have to qualify with income with that specific spouse A.
So if spouse A receives spousal support and child support, is that considered income? And that's a huge issue or questions that my clients have.
Absolutely. It is considered as and it's actually part of the application because it is considered as income for them. Yes.
And do they need to receive it for any specific length of time? I know I've had clients run into issues because it's a newly finalized divorce and they haven't been receiving support for a specific length of time. Is there a requirement in terms of how long they must receive spousal or child support for that to qualify as their income?
And again, it goes back to the lender specifics. But if it's a court order and it's on paper and it's on the final order from the court, I don't see why they wouldn't accept it. But again, each lender is different, and we would have to see everybody's guidelines in that case. What I've had in the past, if there's a situation that it's tough, and we have lenders that probably we can't qualify with them, we'll go out and look for lenders that we can do it with. We have that flexibility to find that lender that will do it. We might not get the best interest rate. We might not get what they're looking for at that moment, but it's a lot better than having to sell the house to be able to pay off spouse B. So we'll be able to keep them in the house for a little bit until they get everything dialed in, and then we can refinance into a better loan. We've had those situations before where we need to help somebody and keep them in that house, especially in this market where it's crazy and you can't find anywhere to live, right? Or downsize. So we have the tools and the knowledge and the contacts to be able to make things work if we have to.
So what costs are related to refinancing that people should be aware of?
So there are closing costs. We have escrow costs. We have title insurance costs. We have appraisals. We have lender fees. We also have impounds, which means they want to keep reserves. Escrow wants to keep reserves for taxes and insurance. It's usually 2 months that they want to keep in there. So those are called impounds. So we have all those, and it's roughly about, I want to say 1.5% to 2.5% of the loan amount, which are closing costs. On refinances, if there's enough room on the property value, we can usually roll those into the loan amount, and there's usually no out-of-pocket cost aside from the appraisal that has to be paid up front. Other than that, there's really no out-of-pocket expense. Or there's a choice if they have funds available, they can pay those out of pocket and keep them off the loan.
I can say from a legal standpoint, generally, or most common, the refinancing party, so spouse A would be responsible for any refinance costs, but that's something that can be negotiated, or the court could order something else in terms of spouses sharing in that cost. But I would say most common is the refinancing party pays the cost. Is that true from your end, from what you have seen as well?
Yeah, that's probably most likely the scenario that's going to happen, because they're the ones refinancing, that's going to be in their name. And like I said, I'd say 90% of the people roll their closing costs into the loan, so that they end up paying for the loan, for the closing cost along the way.
So how long does the average refinancing? I'm sure it must vary depending on who's applying and the type of loan, but in general, how long does it take from initially reaching out to you to closing on the refinance?
Sure. I usually tell my clients that once we submit the application, or once we have all the information, it usually takes anywhere from, to be on the safe side, for anywhere from 30 to 45 days. It could be less depending on the situation. But it's no longer than 45 days, unless it's something really special and we have to go out and look for a lender, and in case if there's a crazy situation going on. But I'd say 30 to 45 days average.
Does spouse B need to be involved at all in the refinance process?
Um, Obviously, when it comes to title, there's going to be some paperwork there, maybe a quitclaim deed and things like that. But we're going to be okay because of the finalized order. If we don't have a finalized order, like I said, they are going to have to sign a quitclaim deed to the property and agree that they don't want anything to do with it. But other than that, it's really hands off from spouse B situation at that point.
That's what I've seen as well. So if the parties are legally divorced, they have a divorce order, spouse B has already executed a quitclaim deed, then they don't need to be involved in the refinance or the closing of the refinance whatsoever. But I know what's common as well is to protect spouse B's interest in the home so that they get paid. The requirement or a term of the divorce order would be that spouse B executes the quitclaim deed at closing and is paid at the same time. And have you seen that as well when you're working on these types of loans?
Right, yeah. So they'll wait, because once all the money arrives into escrow from the lender, it gets divvied up to the last lender, it goes to vendors, and it goes to where it has to go. In this case, when they're getting paid out for spouse B, escrow is going to give them that money, or give her that money when it comes time to it at closing. So if they get rid of that, if they submit that quitclaim deed, there's a chance that, hey, escrow doesn't have information that that money goes to somewhere, so they give it to spouse A. So typically they want to do it at closing to be on the safe side.
So if spouse A doesn't qualify, like they come to you, they fill out the application process, provide you with the documents, they don't qualify, you can't find a loan where they would qualify, are there any other options for spouse A? Like could they
it depends. It depends why they don't qualify. Most of the time is because of income or expenses. Their debt to income ratio is not there, or maybe their credit. We could work on their credit to be able to fix it, and for them to qualify. Then, if it's income, we can either ask them if they have a co-signer that's willing to come into that loan with them, so they can use that income to qualify. It just depends on what the issue is, but usually it's income. So we would ask and see if they have somebody else to see if they qualify or not. The other option, unfortunately, the last option would be to sell the property, and that would be the last option.
So Victor, I have so many more questions for you. This is such an interesting topic for me, and I'm sure my clients appreciate all the information. So I am so, grateful that you're able to share this information, at least, some main points with our audience today. If people have any more questions about refinancing, I know, let's see, your website's motomortgage.com, and I believe you have a YouTube channel as well. Is that right?
Correct. Yeah. So it's Model Mortgage Group on YouTube. And if you go to motomortgage.com, you want to click on the map or the Washington State area, and we're Model Mortgage Group here in downtown Edmonds. You guys can reach me at victor.lopez@modelmortgage.com as well, or you can find us on Facebook at Model Mortgage Group here in downtown Edmonds. So.
Thank you
And
so
my
much.
phone number is, my phone number is 206-769-2908. If you have any mortgage questions whatsoever, we're here to help. No strings attached. If you're looking to refinance, we send out estimates as well. If you want to do it, or if you want to wait, or if we need to create a plan for you, we can do that as well.
Thanks, Victor. And thanks to all those who joined us today. I hope this information is useful for you or for any others you may know that have to deal with these issues. And join us again next week for our webinar series. Thank you.